Are you a business owner or professional in your 30s and 40s and wondering how on earth you can become a millionaire? If so, you're not alone. But I'm here to break it down for you and show you how it might be a lot simpler than you actually think. And don't worry, we're going to do this without going viral on social media, hitting the lottery, and starting an OnlyFans. Well, unless you're into that type of thing, and if so, cha-ching. I'm Justin Green, certified financial planner who helps online business owners and professionals in their 30s and 40s build wealth and get off the financial treadmill that they've been stuck on forever so that they can have financial freedom in their lives. And speaking of freedom, I'm actually recording this here on vacation in Florida. So I apologize for the video and audio quality. This is not what you should expect moving forward on this channel, but I wanted to keep bringing you the insights and education that I've been providing you for millennials in their 30s and 40s trying to build $1 million net worth. So let's dive straight into the video. All right, so the very first thing you would need to do is calculate your net worth. I'm always surprised by how many individuals and families I talk to that can tell me exactly how much money they make, how much money is in their bank account, but they have no idea what their net worth is. So let's define what net worth is. Your net worth is simply the calculation of your assets minus your liabilities. So in order to calculate this, what we're going to do is list all of your assets out. This is your bank accounts, your investment accounts, your houses, your investment properties, anything of monetary value. Now, what I would exclude is jewelry or cars, things that either you're not going to sell to produce a value or they're going to depreciate before the time comes due for you to sell them, such as a car. Now, on the liability side, what we're looking at is what are the debts you owe? Do you have any credit cards? Do you have student loans? Do you have car loans? Do you have mortgages? Do you have personal loans? Any type of money that you owe on something. And this could also be in today's age, could be buy now, pay laters, right? So, for example, I know a couple of years ago, my wife bought a Peloton. They had a great deal to pay 0% interest and you paid monthly on like Klarna or Afterpay or whatever it was. And so those would be considered 0% interest debts, and you want to list those as well. So once you do that, you can have a really accurate view of what your net worth is. And now we've got a starting point. Like any good GPS, you need to know where you're starting from. And if you don't want to do this manually and you want to have an online portal where you can actually connect your accounts and list out your assets and debt, that will automatically update for you so you have a live net worth tracker, then go ahead, click the link below or scan this QR code, and we can get you set up in Right Capital for free to connect your accounts and have a live net worth tracker. So now that you know what your net worth is, we've got a really great starting point for you. But now we need to take a look at your cash flow and start tracking that. So one of the biggest mistakes that I see our generation make is that they just set an arbitrary goal of, I want to be a millionaire by age 35, by age 40, but they never really done any of the math and broken it down to figure out like what they would need to save to get there, or vice versa, like if they can even afford to save that much. So is it a super unrealistic goal? So what we want to do is actually track your cash flow, and that at a very high level as simple as what's the money coming in. So whether it's a salary being paid by a company or whether this is your profit salary from your business. But I want to know what's actually hitting your bank account as take home pay after you pay your taxes. And then we can figure out, okay, what are you spending and what's left over each month? And what we can do here is figure out how much money you have available to save for your future goals, which will ultimately be increasing your net worth. Now, the tricky part here is if you're spending all the money that's coming in and you've got no ability to actually save for your goals, then we're going to have to figure out one of two things: either make more money, or two, you're going to have to spend less money. But without tracking your cash flow, we can't actually figure this out. Like nobody's coming to sprinkle a little bit of magic dust onto your bank account, and all of a sudden you have an unlimited amount of money to save each and every month to hit this arbitrary $1 million goal. But when we track your cash flow, we can actually figure out which dial do we need to move a little bit to increase the amount that you're able to save each and every month and make this a realistic goal for you. And once we track this cash flow and we understand how much you actually have available to save and invest each and every month, then we can do the math to figure out how long approximately is it going to take you to reach that millionaire status. And if we do that math and we figure out you're 10 years behind where you want to be, well, the great thing is we can fix that and we can look at either one, making more money, which is why I love my business owner clients because they have a really innate ability to go out and just make more money. It's a little bit harder if your salary is controlled by someone else, but don't worry, there's also a second option. If that's you, you need to figure out how to spend less money. All right, but let's pivot a little bit. Let's say you figured out how much you can save each month to get that $1 million goal. But you're like, you know what? I kind of want to speed this process up. This seems like it's going to take too long. And so what you do is you start chasing really high risk, high return investments. That's exactly what you don't want to do because you really have zero control over the outcome of this situation. Yes, this may be a home run for you, but when it comes to investing, I'd actually rather be the guy who gets on base every single at bat. If you don't understand baseball, let's try a football reference. Rather than throwing the long ball every single play trying to score a touchdown, let's be like Tom Brady, the GOAT, who had slow, methodical drives with short plays to reach the end zone. Well, pretty much every time he got on the field. All right, I digress. I'm a Tom Brady fan. You get it. Anyways, what I'm trying to say to you to kind of put the analogies aside is rather than chase these high risk, high return investments that may or may not pan out to speed up your timeline, the better thing to do is to actually just try and get market average returns. So you can invest in low cost index funds that will allow you to try and just pace the market. And when you do this, you can assume a return of about 7 to 9% annually over a long-term period. Now, this is not guaranteed, but this is a good assumption to do the calculations to figure out what you need to do to reach the millionaire goal. This is actually investing. And this is a good reminder that investing should be boring. You should not get excited about your investments. That's trading. That's day trading where you log in, you look at things every single day, you're tracking these fancy little charts. That's great. Some people are good at that. Most people are not actually as good at that as they think they are and as they pretend they are. Even the ones on social media who only share their winners but never tell you about how much they lost. The reality is hedge fund managers do this for a living, and very few of them actually consistently outperform market averages. So if they can't do it and this is their 24/7 job, well, it may be a little bit harder than you think. So let's not pretend you're a day trader because let's be honest, you're running a business, you're working a job, you've got a family, you do not have time to follow these things day to day. So let's just invest in low cost index funds that will get you market average returns. But hey, you know what? Maybe you do want to speed up the process. So how can we do that without chasing high risk, high returns? So the simple answer is you save and invest more money. So there's only few numbers in this equation. There's how much you're saving times your assumed annual rate of return equals over an amount of years equals, right? And so if you want to lower the amount of years, then you need to either increase the amount you're saving or the assumed rate of return. We just went over, don't do that. Don't mess with the rate of return. So then the only option here is to save more. If you want to save and invest more, there's two ways to really do this. The first option is to, well, make more money and save the same percentage. So if you're saving 20% now at say $150,000, if you continue to save 20%, but you increase your take home pay to say $300,000, you've still doubled your savings. But let's say you don't really have the ability to make more money, then your other option is if you're saving 10% at $250,000, well, then you need to figure out a way to increase your savings rate using that same $250,000. So if you increase that 20%, you've doubled your savings on that same amount, and this will speed up the process and you're in control of it. Both of those examples will result in an increased savings amount. I generally like to look at percentages just because, well, this gives you an idea of how much of your income you're spending. And if you're spending less of your income and saving more percentage, well, then that means you're going to be able to live off of less income in the future. 20% is a really good above average savings target rate. But the reality is your target savings rate is going to be super dependent on your actual financial plan and your goals. So this may not be the right number for you. All right, the final step, be patient. So most people, they just get bored too soon and they can't stick with the long-term plan. When things are going a little crazy, the news cycle is a little bit crazy like we've had lately, the reality is you just have to keep going, keep investing. You can adapt, but you don't need to make drastic changes. One of the worst things you can do is sell off all your investments because you think the world is ending. We've had so many different situations in this country where people thought the world was ending. We had '08, we had 9/11, we had the '01 dot-com bubble crisis, we had a pandemic. All of us millennials know all about that. We've had assassination attempts on the president's life. There's just so many different things that can happen. In the reality is like we've always kind of kept chugging along as a country. So don't panic, don't fear, don't make decisions based off of current political events, and just continue. You can make adaptations to the plan, but don't pivot completely. Don't sell out, because the reality is this is going to take time over long-term decades. Things just kind of slowly and steady go up historically, and so that's just something to keep in mind. We're not looking to focus on the day to day. We're looking to focus over 10, 20, 30, 40, 50 plus year periods to building wealth. You're in your 30s and 40s realistically, you're going to live another 50 to 60 years hopefully, and that means you have a lot of time ahead of you. So don't make decisions based on short-term things. Let's invest for the long term, be patient, and watch how the results will compound over time. Now, if you want to see a full breakdown of exactly how to reach $1 million net worth by the age of 40, go ahead, check this video out, and let me know what you think.